What's going on, guys? It's Lewis here with Crypto Elite, and today's video is going to be a longer form market update video, similar to how I used to do it back in the day, where we're going to be going over the CBBI index, the RHODL ratio, the Pi cycle top indicator, MVRV-Z score, the rainbow chart, the fear and greed index, along with the market cap, the total altcoin market cap, the dominance levels, the dollar, Bitcoin, just big picture stuff, and Ethereum, big picture stuff. And then we'll go dive deeper into the, day-to-day trades. And we'll also look at some other things that I'm looking at, such as artificial intelligence coins and other things that seem really cool. First things first, though, I just got back from Bitcoin Miami. It was super fun. I didn't actually go to the conference itself because, honestly, I heard not so good things about it, but I did go to a bunch of after parties, including this one, which was the Karate Combat. Awesome event, which thank you to ChainMyne for hooking me up with the tickets. Really appreciate it. And Karate Combat is very, very cool. So, yeah, if there is another one of these things coming into town, I recommend it. It's really fun. So thank you to Karate Combat for putting on such an awesome thing. Also, I got to go to a Maxim Bitcoin party, which was freaking really nice. So thank you to ChainMyne for that. I didn't actually look this up, but I believe it was this company that actually helped, or that gave me the ticket. So I do really appreciate ChainMyne for that as well. And, obviously Karate Combat and ChainMyne for hooking it up. So we have that. One thing that I saw, which I thought was really crazy, is the fact that a fake image of the Pentagon exploding briefly sends jitters through the stock market. So there was an AI image that showed an explosion by the Pentagon, and it looked so real, and apparently it really freaked a lot of people out, and it caused a huge dump in the stock market. So things are, getting really, I don't want to say scary, but they're getting really real, really dramatic, really quickly with AI generated imagery. And you could just see the implications. This is just one implication. There's going to be so many things that are going to be happening when it comes to AI, and how big institutions are going to use AI to basically trick people and to try to play the market. You already know that there's going to be a lot of shenanigans going around, and this probably was just a little test run. Who knows? But yeah, this they said that there was reports of an explosion near the Pentagon in Washington, D.C., and this really went all over a lot of different news stations. They just pushed it out without doing any research at all, because obviously it was fake. And so we had a dip in the stock markets, followed by a little bit of a rally to recover. But things are not looking good, and we will get into that in just a minute. Once not really a minute, more like probably like 20-30 minutes, because we have a lot to go through. So with all of that out of the way, let's get started. We're going to start off with the CBBI.info, Colin Talks Crypto Bitcoin Bull Run Index. So this, since I haven't made this in a while, I'm going to be going over all of these things. Hence, this is going to be a little bit of a longer video. So yeah, that's what it is. Watch it on 2x speed to get through this. So the Colin Talks Crypto Bitcoin Bull Run Index, or the CBBI. This is a Bitcoin index that utilizes advanced real-time analysis of 9 metrics to help us understand what stage of the Bitcoin bull run and bear market cycles we are in. The confidence score indicates whether we are approaching the top or the bottom of a blow-off Bitcoin cycle. The CBBI has been trained on the blow-off tops of 2013 and 2017. As such, its purpose is in identifying the characteristics of a blow-off top specifically. And you can see the FAQ to answer a lot of questions. And this actually has the price cycle top indicator, the RHODL/NUPL chart, the RHODL ratio, the PWEL multiplier, the 2-year moving average, the Bitcoin low trend line, MVRV-Z score, reserve risk, and the Wooble top cap versus CVDD score, all within this, which is why I like it, because it is it is a culmination of many different indicators, and it has been pretty accurate. I did not I wish I was more just focused on doing this, because I did have a thing where I said, if I look this up, what I do with all of these things. So pretty much when this is under 5%, under 15% or lower, that is when I start averaging into Bitcoin. So I started to average into Bitcoin right around $22,000 when this was 15, and it just kept on going down. So I was just averaging in. And then once it gets to 5%, that's when I put 50% of my USD into Bitcoin. And so that was around 19,000. And I actually was pretty much all in Bitcoin by this point, even though I do say that if this indicator, this CBBI Bitcoin Bull Run Index, ever goes underneath 5, that's when I go, ever goes underneath 3, that's when I want to go all into Bitcoin. So as you could see, it reached a 2 at the pretty much the lows of 15,829, so about $400 off of the lows. But yeah, it reached a 2, which is the only time that it was under a 3. At the bottom, literally at the bottom, November 22nd, 2022. So that should have been the biggest indicator to just say, okay, time to go all in. And that's why you have to be you have to be strict with your approach, and you have to be calculated and logical, and use indicators and use price action and use things that aren't so emotional. Because I tell you one thing, when it was $15,000, when we had the FTX crash, and FTX blew up, and all these other platforms blew up, BlockFi blew up, Celsius blew up, all that stuff, and exchanges were, going down left and right, I took a small amount of money off of one of the exchanges that I was using instead of actually buying. So yeah, it even got to me because I was a little concerned about this, but I did end up getting, going all back in. I think it was $19,000 somewhere on the run up. So that's not too bad. And I actually started to scale out a little bit up here around the $30,000 range, but we might still be going up. So we're gonna have to check this out. So yeah, we reached the low under 3. So under 3 is the all in, and now we're back above 25. So if this does happen to come back down, like how it did back in, well, even look at this, 2011, it was 10, 9, 8, it was a 9. I guess it never reached under 3, but it was a 10, it was a 9. It went all the way up, and then it fell all the way back down as Bitcoin went from $7 down to $4.50. So if this does come back down, that would possibly be a pretty good indicator to buy, as the bottom may possibly be in. I'm actually thinking that the bottom is in more than I'm thinking the bottom is not in. So in case you were wondering, probably about 75-25 that the bottom's in. And we have to keep on looking at this. 2015, the CBBI was a 1 when Bitcoin was $200. Bitcoin rallied all the way up to just about $300, and then it fell back down to 221. So it was only $20 more, or $22 more than what it was at the bottom back here. And the CBBI did come back down to 3. So 3 and under. Actually, I put under 3%. So 1 or 2 is when I go all in. But on the retouch, I'll say if it reaches a 3 on the retouch, that's probably a good time to go all in. And then what happened in 2018, we reached a 2, and that was when Bitcoin was at the bottom. Same thing down here. We reached a 2 and the Bitcoin was the bottom. Same thing down here. We reached a 1 and Bitcoin was the bottom. And then we came up a little bit. So we went from 3,000, let's see, the 3,200 to 4,000. And then we came back down to 3,400. So it was 3,200 and then $200 more. We came back down to just $200 more than that. And so what did we do here? Well, we were at 15,800. And then when we popped up, we actually, we haven't come back down. We haven't really done the whole up and then like major up and then come back down again, major up and then come back down again, or up and then come back down. I guess you could say that this right here was a move up and then a fall back down. And we went from 15,800 to basically 16,800. And I guess you could say that was it. Anyway, if this does come back down to under at this point, I'm going to write this down. I'm going to say if this comes down to under a 5 again, then I will deploy the rest of my capital. And so, yeah, that's the CBBI historical chart. Obviously, once it comes up here to, or once it gets to above 95, that's when I'll just, sell everything. But that's not going to happen for quite a very, very long time. It's only at 26 right now. But yeah, like I said, if it does happen to come back down to this area down here, then I will be, I'll definitely be grabbing it. And then once it comes up in the 95 area, then I'll sell everything, and I'll probably start scaling out once it hits 90, to be honest. Yeah, if it hits 90, then I'll start scaling out no matter what. And then if it hits 95, then I'm out. Okay, so that was the CBBI index. And now I'm going to look at the Pi cycle top indicator. This one is really, really telling for when the tops actually happen. You can see that it called the top back here in 2013, called it again in December of 2013, and then eventually it called it again in 2018, 2017. And then back in April, pretty much the top April of this last cycle in 2021, when Bitcoin was, $58,000, it fell it was, this Pi cycle top indicator was made, and it dropped all the way down to $31,000. And then Bitcoin did end up coming and creating a new all-time high. So it was at 63,000, and then it went all the way up to 69,000, or possibly maybe 67,000. So it went $5,000, $6,000, $7,000, or $5,000 or $6,000 above where it was when the Pi cycle top indicator went off. But obviously, if you would have just literally gotten out of the markets here and sold and left everything, you would have done really, really, really well. So I'm gonna definitely be using this for the Pi cycle for the cycle tops. And of course, you can't. This isn't going to be relevant anytime soon, but this is literally just for next cycle. Next up, we have the MVRV-Z score. This one, once it hits the green zone, 0 and below, that's when I like to start stacking in. And once it hits 8, that is when I want to start, stacking out, if you want to call it like that. It never actually reached this level last time. It only reached up to, let's see, it was 6.9. So yeah, 6.9 for this last cycle. So it actually did not get to the 8 level that I want to, that I have as my indicator. And then 8.5 is when I just leave all markets and just, leave go into cash and get out of all markets. It did not reach that this cycle. But for buying back in, typically when it reaches the green zone, like I just mentioned, that is when I start averaging into Bitcoin. So it reached the green zone back here when the price was $22,000 to $23,000 when it got to the zero line. And then obviously it went from 21 to 22 to, 23, and then it fell all the way back down to 15. And when it reached that, this was obviously the lowest point. Let's see if I could find it on here. 10, 11, should be right around here. 16.12, and that was negative 0.284. So that was pretty low. It back here though in 2018, it reached even further, even lower than that, at a negative 0.425. And same thing back here, negative 0.44. Same thing with back here, negative 0.59. It never actually reached there this cycle, which is really telling. I don't want to say it's confusing, but I will say that if this did get down to, the bottom of this green zone, that would have been a much more obvious buy signal. Of course, we did get the major buy signal on the the CBBI, the Bitcoin Bull Run Index, when it hit a 2. But as far as the MVRV-Z score, this did not really work out this last cycle top, and it did not. Look at this. This was in November. This was when Bitcoin was $69,000, and the MVRV-Z score was 3.5. So this really did not work out very well for the top this cycle. And for the bottom did work out how I like to use it. Just use this to dollar cost average in, which is what I started doing, and you probably, if you would have done this, you would have been averaging in between $22,000 and $15,500, which is nothing bad, not too bad. So that's the MVRV-Z score. Okay, so now we're on to the RHODL ratio chart. And for this one, I use obviously this lower green bound as the buy zone and the upper red bound as the sell zone. So this one, just like the MVRV-Z score, it did not really tell the top, but it does, or it has done a good job at telling the bottom, and it has done a really good job of telling the top back in 2017 and 2013, and even the first one and the second one, along with 2011. It's called the top all of those times. It didn't do it this time around though, which was quite annoying, to be honest, even though I did end up selling like near the top anyway. But regardless, the way I use this is as soon as it touches the green for the first time, I just go in immediately 30% into Bitcoin, holding it, not gonna mess around with it. So Bitcoin was around 23,000 to 24,000, like 23.5 when it hit the green for the first time. And that's around 30% of my portfolio goes in here. And then if it reaches the midline, which is this line right here, which this is actually, this is not the exact midline, but this line is what I use. Once it hits this line, then I go in with another 30%. So 30% right when it touches, another 30% once it hits the second green line, around 50% of this lower band, going with another 30%. So that would have been around that would have been around $17,000 per Bitcoin. So yeah, you would have had around 20,000 as your average buy-in price. Not bad, really not bad, just using this method with just those two buys, and that would have been 60% of the portfolio. So now that it's back up here, if it does come back down and tap the green again, then similar to how it did up here, so it came up here and then it fell back into the green zone, similar to what it did back here. It came up and then fell back down into the green zone, then yeah, that would be another buy for me. I would definitely go in if it fell back down here. So definitely going to put that in the books. Now we could take a look at everyone's favorite chart, the Bitcoin rainbow price chart. And this one, very simple. Once it gets into basically a fire sale territory, which is this blue zone, not the purple zone, because they actually added this purple zone after the fact, after it fell underneath the basically a fire sale. I would buy it when it was in this basically a fire sale zone. So Bitcoin, I'm pretty sure Bitcoin was somewhere around 30,000 up here. Actually, wait a minute. No, this looks like it was somewhere around 20. And it fell to 20, and then it fell down to around 15 down here, and then it's been making its way back up. So yeah, this is somewhere between 20 to 25,000 and this basically fire sale zone. This is where I start buying. Obviously they added this purple zone in here, and it's just more better time to buy. And then of course, if it ever reaches maximum bubble territory or the seriously sell, gotta sell at those times. Like there's pretty much no compromising for that, because even though it did pop up above it, I mean, come on, that was it. I'm not sure if it will actually ever reach this again, because this, to me, it looks like it's not actually in the shape of a rainbow, but more in the shape of a forever up and to the right chart. And of course you can't have it be a full arc like an actual rainbow, because that would indicate that Bitcoin will eventually start going down. But it just seems a little obtuse, you know. I don't know what else to say with this. This isn't like, I mean, technically it was good. It has been good to use, but of course I like to use all the different indicators, and pretty much this isn't going to be like my main thing. It's sort of like a fun thing, this Bitcoin rainbow chart. But yeah, it is actually below basically a fire sale. So according to this rainbow chart, it's a great time to buy. Up on the list, we have the Bitcoin Fear and Greed Index. This one is pretty self-explanatory. If it's under 15, that's when I start looking for buys. And if it is over 75, that's when I start looking for sells, and I start scaling out, unless we're entering a full-blown bull market or something like that. But yeah, if it goes under 15, I'll definitely want to look for buys. And then if it goes under 15 and then rises back above it, then I'll wait until it goes under 10. And then if it rises back above that, then I wait until it goes back under 5 to start looking for buys again. So that's a little bit complicated when it comes to the Fear and Greed Index, but right now obviously it's 49. It's smack dab in the middle, so nothing really that you could do with this. And before I actually move on to Bitcoin, market caps, dominance levels, dollar, all that stuff, I do want to just look at this and say something about this. This is the Bitcoin versus the S&P 500, the Dow Jones Industrial Average, Tesla, and Apple over the last 5 years. And of course, over the last decade, and you know, if you got in Bitcoin in 2013, then that would have done exponentially well, and that would have done the best, hands down. And if you would have gotten to Bitcoin, I mean, even in 2015 or possibly 2016, you know, you would have done extremely well. But I'm looking at this, and I'm looking at Tesla, and Tesla has outperformed Apple, the DJI, the S&P 500, and of course Bitcoin. And that's what is really, I don't know, it's just like a little unbelievable to me that Tesla, you know, a car company, is outperforming Bitcoin still to this day. It's majorly outperforming Bitcoin, and it begs the question if you're looking to create financial gain, is the crypto market really the best market? And I would argue that the crypto market is the best market during a bull market, yes. And during the end of the bear market, you don't really know when that's going to be, but pretty much during the end of the bear market, or when things are in accumulation phase, or when people aren't talking about stuff, you could, you know, pick pick out different cryptocurrencies, different altcoins that have the potential to do a 10x, a 50x, maybe even a 100x. I don't know if that'll happen again, but also you could look at the stock market during the times where crypto is in a bear market, and sometimes the stock market keeps on going up, and sometimes the stock market does really, really well, even when crypto does extremely poorly. And I mean, that happened back in 2018 and 2019 and almost all of 2020. I mean, I remember in 2018 when crypto just crashed 90%, and there were stocks like weed stocks just going absolutely berserk, going up hundreds and hundreds and hundreds of percent. And there were other stocks, tech stocks, going up hundreds and then thousands of percentage. Even Tesla, Tesla went up 2,000%. Bitcoin only went up 700% this last bull market over the last 5 years. So I don't know. This is definitely something to consider, and I would say that diversification from strictly cryptocurrency into stocks is a plausible and is something that makes sense. Is something that makes sense to not have all of your eggs in one basket, not have all of your eggs in crypto. So I'm definitely going to be pushing taking some of my cryptocurrency, USDT, fiat, whatever you want to say, whatever you want to call it, stable coins, putting it into a Webull account and trading certain stocks. And I'm going to have a watch list of a few stocks as well that I could trade. So I'm going to start adding that to my repertoire and to my market updates and everything like that. So yeah, just wanted to intertwine and mention that, or intervene and mention that. All right, so now I think we could get into the actual charts, and we're going to start off by looking at the total market cap. And what I like to do for these big long time frame charts is do the Fibonacci and take the Fibonacci levels. So I took the Fibonacci from this bottom, which I think was the bottom of the last cycle, not this one, but right here, up to the top. Why is that? Because if we do take it from here, then you can see that the 38.2, we got a nice bounce off of that. 50% got a nice bounce off of that. 61.8 golden ratio did not get a really nice bounce off of that at all, but fell down and got a bounce off the 78.6 / the 200 week moving average. And then we ended up falling back down to the, what was this, 2020 / 2021 year close / open, so that was right here, and the 2018 highs, of course, 2017 and 2018 highs. So that's where we ended up bouncing off of. And then we came up to this level right here, which if you take the Fibonacci from the top to the bottom, this is the 23.6 Fibonacci level. I was thinking we were going to come back up to 38.2. Like just coming up to the 23.6 is not bullish like at all. But I would think that we would come up and then make it up to 38.2. So it's still a lot of what ifs. Looking at this chart in particular, though, it's not bullish because you could see that we had the weekly SFP, and if you look at this is a move up followed by a huge move down and a close down, which means that this is a huge wick up, and maybe that'll be the 2-week chart. Yeah, so you could see this is a huge wick up into resistance at the top. That's a bad, it's not a good looking candle. That's really not a good looking candle for the cryptocurrency market cap. And then we had this wick on the two-week chart as well, come up and do a swing further pattern before moving back down. So I can't really say where we're going to be on the total market cap, like where we're going, because it is pretty tough to say. If I had to guess, I would say we're heading down, but oh man, I just have I don't know, maybe it's a gut feeling, maybe it's just hope and prayers that we move up. I do like how we are on this 200-week moving average. This is the moving average and the exponential moving average. Every time we tapped it, we except for right here, we seem to be, you know, bouncing off of it, and we are still above it. So that's not too bad. But yeah, this formation really, damn, this doesn't look good. This really doesn't look good. However, and you'll see this on Bitcoin as well, we are in the, you know, weekly high, low, higher high, higher low for the close, higher high, higher low, higher high, equal low, lower high, and now a lower low. And that's not good either. That's not good either. I don't know what to tell you. So that's the total market cap for all of cryptocurrency. What I will say is this. If it does come up to 38.2, I'm going to definitely be selling if it comes up to here. And if it comes back down here, you got to go back in. I mean, I'm going to be going back in with at least 40% my capital if it does happen to fall back down to, you know, the previous lows. And then if it does end up reaching this 88% fib retracement, then that's when I'm just going to go all in. So that's pretty much my plan. I didn't really plan on doing anything at the 23.6 because this level right here, because it's not a normal fib level. But yeah, if it comes up here, definitely sell. If it comes down here and here, I'm definitely buying. And then we have the total market cap to excluding Bitcoin, which obviously it's like very, very similar. If you scroll back, you could see that these were the 2017/2018 highs, and we fell into them back here, had a spike up, and then had a huge move down during the you know, the FTX collapse, and this pretty much marked the low. Actually, no, a few weeks went by, and then this marked the low in December for the total 2 market cap, and this has been pretty nice. Why does this one look better? I don't know why this one looks better than the regular market cap for cryptocurrencies. What I will say this though, that if it does happen to come back down here to this previous low, then I'll definitely want to start stacking in more Bitcoin, even though this is the altcoin chart. And of course, if it comes up to the 38.2, then I want to get out. This one didn't even reach the 23.6. You could see that's where it is right there. If you take the fib from the top to the bottom, 23.6, this one didn't even reach it, which is pretty bad, I want to say. So if you are looking for something, you could a clue, you could say if it comes back up here and then gets rejected and does the same thing that this one did, which was put in a swing failure pattern, then you could short the market. But that's remaining to be seen. This one didn't even close anywhere near what it did in August of 2022. So that is the total crypto market cap. Obviously, like, not much to say. We're sort of in no man's land, but come down here or come up here and I'm a buyer or a seller. And I don't think things are looking too good, but I'll save that for Bitcoin itself. Up, we have dominance levels, and I just look at the top 100 minus Bitcoin dominance chart, basically the altcoin charts, to see where we're at. And the altcoin charts, the dominance levels have not been very accurate, but if you want to use them, the typical way to use them is that you buy when the altcoin dominance goes down, and this sort of is an indicator of where altcoins are generally speaking, and then you sell when the altcoin dominance moves up, because typically more money moves into alts and the alts go up in value, and then you sell when they are high up here. And that was really the case, except for in, you know, January, actually, this could go down. Bitcoin went up during this entire time, pretty much during this entire time. And some altcoins also went up, but Bitcoin went up more than alts. So you can't really use this as buying and selling strictly like everything. But I guess you could have said, you know, I'm going to go into Bitcoin here and I'm going to go, more into alts down here because altcoin dominance should move up. Money should flow into alts. But the way things are going, where alts are just like meme coins are the only ones that are popping off, I don't want to throw too much money into alts right now unless I see something really, really appealing, which I've seen a couple, but nothing too crazy. One of them I'll go into later, and or I'll go into a couple of them later. But yeah, I'm not going to use the dominance charts anymore to base like very heavily weighted decisions because it's not been the most accurate, you know? Okay, so now let's go into the dollar, because the dollar is inversely correlated with Bitcoin and risk on assets for the most part. Yes, there are some instances where it doesn't completely correlate with it, but I think it's good to understand where the dollar is at for the bigger picture of things. And you can see, looking back here from December 16th all the way until January of 2018, the dollar was going down. What was happening during this time? The 2017 crypto bull run. Then the dollar went up from 2018 all the way up until March 2020. What was happening during this time? Crypto was going down and crypto dropped 90%. Then the dollar went down from March 2020 all the way until, what do you know, January or February or March, basically January, February of 2021. Now, what happened here? As the dollar went down, crypto surged and had the last bull market, right? So, and then of course, even right here, dollar starts going down, and we had that little run up, but right here, June, July, August. So right around here is when Ethereum and Bitcoin started going up again. Alts and most cryptocurrencies were still going down at this point as the dollar is going up. But I do remember August, September, October, up until November, Bitcoin and Ethereum were still going up, right? This is where Bitcoin reached 69,000. So during this time, the dollar went up and Bitcoin went up. So it's not 100% correlated, but typically you could use it in a general sense and say, all right, well, when the dollar is going down, Bitcoin's probably going to go up. It has a higher chance, higher probability of going up, and that can help you in your decisions. So what happened to the dollar? Well, let's look at the monthly chart right here. If we look at the monthly chart, you could see that we had this huge consolidation from 2004 until 2014. It busted out and then had the double top, came up, busted above it, basically a swing failure pattern above it, and then fell back down and then crashed. It had a big crash, came all the way back up to the top, swing failure pattern again, and then crashed all the way back down. Finally, it busted out in 2022 and it just went soaring, and the US dollar went up just so much. So this was actually, side note, a great time to travel to other countries when the US dollar is really, really high, like here and here and here. Great time to travel. I actually just got back from Colombia, did some traveling there. Highly recommend it. And the US dollar was worth a lot. So it's strong. And that's when you have the best currency rates. So we have the dollar. What's it going? What's happening with the dollar right now? Well, obviously it's on the down. It's moving down. And we made the high, we literally just fell all the way down, no stopping whatsoever, pretty much. And then finally had the bounce, and then came down and made a lower low. Yeah, so we made a lower low, and now we're bouncing up. So I would think that, well, let's actually go down to the daily chart. We'll go daily chart, maybe get this a little bit more precise. Up move for the down move. Yeah. Okay. So here we go. We have this right here. This is the bearish order block that we have for the dollar. So that typically means that there's going to be some movement in here, and it's going to go down, or it'll come up and then go down, or it might do that. I'm thinking, obviously, as you might be able to tell, dollar's going to go down and crypto is going to end up going up. Obviously, I don't know what is exactly going to happen, but this is my target down here at $99.25, because that is right underneath the $100 mark, which of course is a huge psychological number. I think that we're going to come down here. Maybe we just bounce off the $100, but I think there's going to be some manipulation, maybe a spike down, maybe a move down in like 2 or 3 days, who knows, before the move back up. And so this will allow crypto to basically move up in value, go up in value, or have a higher probability of going up in value. And then once the dollar starts moving up, you know, and starts moving up quite substantially, then yeah, it's not going to be too good for crypto. The only other thing that is a possibility, maybe a possibility, is that, for instance, this top right here, this was the top. You can see we had the fake out. I guess we had the top, boom, double top, and then we had the short-lived moved up, fell back down, and then obviously that was a crash, all the way back up, fall back down. Obviously that was a crash, and this area, this whole area right here was the last top. So when we came above it, we did come back down, retest it, and shot back up, and now we're bouncing off of that and moving up. So yeah, maybe this area right here at 101.88 is the floor, but I would think that we're going to end up coming down here. My bias is that eventually the dollar comes down here, which means that crypto should theoretically have a greater chance of moving up. And so that is the bigger picture view of the dollar. Okay, so now we can finally get to the big picture on Bitcoin. So I have this chart up for BTC. This is my big long-term view for it. As you can see, I have this red zone right here, this red line right here, this blue line right here, this green line right here, and that coincides with this chart right here, which says that we create a top. The green line is the top, and then we fall. However long it takes us to fall is from the peak until we reach the bottom. Then from the low, that is where the low is, the bottom of the market, of the bear market, right? Then we start moving up. The number of days it takes to go from the low to the Bitcoin halving. Sorry, I don't know why my words are not coming out right, but the length of time it takes to go from the low to the halving, that is equal, or just about equal, with a 2% variability from the halving to the peak. And this is absolutely freaking nuts, because look at this. This was the halving. This was the Bitcoin market cycle low to the halving, 375 days. The halving to the peak, 368 days. Approximately 2% less. Then we have the next cycle low until the next halving, 539 days, and the halving to the peak, 526 days. And that was absolutely nuts, because that was approximately 2% less. And then we have the 2018 low, which was right here, and that was this low to this halving date, which was, I believe, where is this? This is 2020. In 2020, so that was 513 days. And if you take 513 days from the halving and bring it to 513 days later, that is literally, that's October. It's basically October 1st, a month before the peak. So that would have been like right here, somewhere in this candle is where this theory, this hypothesis called the top, was somewhere right around here. So you would have gone out within a month, maybe a month and a half of the actual top. Absolutely wild, right? So I drew that out. If this is the low, if November of 2022 was the low, then this is the halving. April 8th is the halving. Then the low to the halving is 504 days, and 504 days from the halving to the quote unquote possible peak will be we'll put the peak at August 25th, 2025. And so this time period right around here, wherever the price is right around here, hopefully it's 80, 90, 100, 120, $200,000. That is when I will take my profits. Most likely, if Bitcoin is still somewhere over here, then it's pretty much, I'm just going to be holding it and not really doing, or trading it and not really doing much. But yeah, this should be where the peak is, somewhere around 2025, if the low is already in. If the low is not already in, then that would be really weird, because that would mean that the low would be very close to the halving, right? This is why I think the low is already in. This is why I have a high probability chance that the low is already in, because if we use this theory, which has been accurate every single Bitcoin cycle so far, and we say that the low is not in, well, that means that the low would be somewhere, let's say July, August, September, October, November, or December of 2023. That would leave very little time from the low to the next halving, which would leave an even smaller amount of time from the halving until the quote-unquote peak. But if this is the low and it's 504 days, then you take that same amount of time from the halving to the peak, and this is a reasonable amount of time. This would not be enough time to, if the low was right here and the peak was right here, was August of 2024, the peak is not going to be in 2024. I highly doubt that. This makes a lot more sense that we're going to get a peak in 2025, maybe even later, because of the slowness of the regulations and everything that's going on. So yeah, this is the long-term big picture thing for Bitcoin. Right now, the price came down and it hit the, let's see here. It hit the 78.6 Fibonacci level from the lows to the highs. 78.6 was right there, bounced a little bit, and then it dropped underneath of that. And I was honestly really thinking it was going to come down to the 88% level. So I had a lot of buys in at 14,000. Of course, it did not hit there. It hit 15 and then started moving up. So I started just buying when I saw this candle. It's like, okay, it's moving up now, and I don't want to be left behind. So I went all in back here. And basically, we are above the 2017 highs. And this, for me, as long as we're above here, as long as we're above the 2017 highs, this area right there, I'm like bullish. I think the bottom is in because that's such a important level, right? So maybe we do come back down. Maybe we come back down and we retest this line, which you'll be able to see a little bit better on daily chart. So let me reset this chart view, and you'll see this line basically from here, tagged the bottom, tagged right there, tagged a few more times. Nice buying opportunities right there. If it comes down and tags this line again, especially, oh man, can you imagine if we slow bled down here and then had a big crash down to 22,000 or yeah, that like right in this zone, right in this pocket, in between the diagonal support and the big horizontal support that we have, which was support, resistance, support, resistance, support. If it comes down here, in fact, I'm going to put a little or a big yellow circle right there. Why did I highlight the rectangle? I wanted to highlight the circle. Yeah. So I'm going to say if this, comes down here, this is an auto buy right there. It's like auto bots assemble, auto buys assemble. So if we take the fib from the bottom to the top, ooh, and it's close to the 61.8. Yeah. Although I don't think I would take it from there. I'd actually take it from here, which makes more sense to me. And yeah, oh my God, 22,000, I am leveraging long freaking 5x everything. I don't know if I'm actually gonna do that, but I'm definitely gonna leverage all. I'm gonna put it all on the line if Bitcoin comes down to 22,000. Okay, and if we want to look at the more shorter term time frames and see what's possibly going to happen, over the next little while, like few days, well, I am still bearish because you could see here, this is like the head and shoulders, looks like it's playing out, which is literally exactly what I said and posted up in the Discord. So pretty stoked about that because it's gone to the shorts really high up and now it's on its way down. So that's really cool. And we had, if we look at this, this is what the market structure has been telling us. So we had the low, and then we had the swing low to the swing high, and there was not really any retracement whatsoever. But then we had, probably because this was a breakout of these highs, right? So we had the highs, and then finally we had another one breakout here that was a false breakout. And then we had another breakout, and this ended up being a real breakout. And then so we just pushed on up even further, consolidated some more, pushed up even further. And then finally, we had this move right here. So you can't really see it. So let me bring this up. But you could tell that this down here was a low. This was a high. This was a higher low. Then this was a higher high. Excuse me, this was a higher high, higher low, higher high, higher low, higher high. Finally, we had a lower low compared to this one. So this is where things first were like getting a little concerning, thinking, okay, so the next move up, probably want to short it right here, target at least the lows, and that would have worked out. Target right, enter the short position right here, and then stop goes above here, target the lows down here. So you would have eventually, won like that. And then it would have, you could have targeted even lower too, but then you would have eventually gotten stopped out up here. But regardless, what happened was we did make a higher high. So then we made another higher high, a higher low. And we just started like consolidating. This wasn't really saying too much after this move right here. This wasn't too bearish. This was actually sort of bullish. So then we finally made another, another swing high, but we came right into that $30,000 region, which was like super, super big area, because if we look back on the daily chart, this whole consolidation right here was right at 28,700. So 28,700 up to 31,850 basically. So this whole consolidation right here, big resistance, and this is from the low to the high pretty much. That was the range. And we had the resistance, resistance, boom, we busted through it. When we busted through it, now we're in this range. Now we're back in this range right here. So that's what I was thinking. I was like, okay, so if we stay within this range, then we're good. But what happened is we fell below it. And when that happened, that really, like, when we fell back down below this white line right here, should not go back and stay under here. That was really, really bad. That was super bearish. Then when we came back up, so what you would do is you would look for a short position. You would look for areas to short. So we came down, we broke the market structure in a bearish way, and we fell down below this major line. So that's super bearish. So then what you would do is you would look for an area to short. So you could take the fib from the top to the bottom, look for the 61.8 or even the 50%, and then look for the bearish order block right here, the up move before the down move that broke the market structure right there. And so that's what that is. So you would look for shorts in this area, and this is where you should have gotten into shorts. And then if you see this candlestick right here, this is insanely, this is a graveyard doji candle or shooting star candle. This is so bearish, this candle. So you would literally, if you didn't get into any shorts, as soon as this candle formed, boom, short position is opened, stop goes above here. That's literally it. And target, if you look at the big picture, target 26,700 basically. Target down here, you know, the bottom of this range, or maybe 27,000, you know, somewhere around here. And that would be, let's see, let me do this, and let me do this. If you would have done that, could have made a 3% to, could have made 8% on a 2.5, 2.6 R trade. Super good, right? So then, you know, that was the trade that I put in the Discord group. So this was in the free group right here, and you could see, you know, this was at 2,900. This is when I put it in with the stop at 30,100, and, you know, target was all the way down there. And so 2,900, that's right around here, basically 2,900. Stop is 30,100, so stop goes up here. And then target was, you know, all the way down there. So that was really good. Glad that happened. And this was the bearish order block, and it never came above this bearish order block. So that was the short position to get into. And then let's say that, you know, it broke down, and when this happened, this candlestick right here, this broke down, these 1, 2, 3 candles right here, boom, after this indecision candle. Okay, so that's actually really bearish as well. Not only did it break down after indecision doji candle, but it also broke down and broke the market structure bearish again, which you could see right here. Here was the swing low, and then boom. So now you want to look for another area to short at. So you could take the fib from the top to the bottom and see if it falls somewhere in line with the bearish order block, which is right here. And that would put you literally right here at the top. Yeah, so there you go. You would put on a trade like this. And I know this is sort of like hindsight, but this is how you do it for next time. And you could target there for a 3.62 R trade. This has not actually hit yet, but this would have been a really this would have been a solid trade. Could probably done that to make it a little bit better. So yeah, so this was another trade. And now what do we have going on here? Well, we have the lows. Let's go to the daily chart. And we have this was the, you know, low. And honestly, as soon as this closed right here, that was pretty bearish as well. But this is the close, the close of the low, and then all of these wicks were major supports, big demand zones, and it fell down. So the demand that was here is no longer here. That's what this is telling me, right? And so I want to look for shorts, and this broke down again. So now let's get rid of that. Let's get rid of that. You can look at this like this. This didn't close as cleanly. Like this is a little tricky, but it's still technically bearish, especially because it's below this white line right here. So you could say that this close right here was a close beneath here, and also beneath this this low right here as well. So same exact thing. Pretty much, you look for the up move before the down move that broke the market structure, and that's this right here. So this would be the bearish order block, which means that the price most likely will come up and tag this before coming back down into the weekly bullish order block, which is down here. And I have 25, 25.2, this area as the area of a possible reversal, or it might end up going much lower. It might go down to that one area, 2200. This is actually a huge area, just like how we pointed out on this chart right here. So this is what this is. Let's see, 25,420 and 23,700 are the two areas. You could also actually just do this. Take the fib on this chart and do something like that. If not this. So there's a couple, yeah, I guess there's a couple areas, but yeah, the 50%, 61.8, 78.2. I mean, they're all 78.6. Yeah, I gotta say, I'm not, as much as I want to be bullish, because I want this to be like a fake out. I want this to be like market makers putting in this head and shoulders looking thing, and then just like doing this, you know, like I don't know, or even from higher up and just tricking everyone. But you have to go by what it looks like, and right now it does not look bullish to me. Like, it really doesn't look bullish to me. Like, look at this right here, this back here, this whole area back here. Okay, so we had a giant move up that was crazy bullish, and then we had another move up that was even more bullish, and then we had consolidation and another move up that was even more bullish, and then we had a move down into this consolidation zone, which was the previous resistance area and previous consolidation zone. So that was still pretty bullish to me. Another move up, more bullish, and then we fell back down below here. That was pretty bearish when this happened. So it's bearish, and then move down, market structure break right here, bearish. So you would target up here for a short, which we never even got, and then it fell back down, bearish, because that broke this market structure and it broke this market structure. So this was bearish, and then boom, as soon as this move happened right here, and it went from 19.6 to 20, basically 22. This was super bullish. It's like, okay, time to get bullish again. Go all back in, because this just reclaimed this market structure back here and this market structure back, this swing low and this swing low. So that's super bullish, right? And now what am I doing? I'm looking at this and I'm like, all right, this is really not bullish at all, in my opinion. And it's like lower highs, lower lows, just continuing to happen. I'm pretty sure that the 2-week had, I guess that was just on Ethereum, but yeah, no, we had this complete engulfing candle, bearish engulfing candle, followed by the move up, followed by 1, 2, 3, 4 weeks so far, the entire month of just downward movement. The only thing that I see which is sort of bullish is this candle right here, which still wasn't the most bullish candle. And if we look at the MACD and RSI, this is pretty bullish. So we had this move right here, and then we have this move right here. So what do you call it? The strength of the downward momentum is waning. If you look at the MACD, and if you look at the RSI, not too much to say with the RSI. The stochastic though is curling up, which is pretty good. So it's hard to say. But yeah, I would think that the most logical move would be move up into 26,000, let's say 26,800, followed by a move down, and that's a short. That's what I think is going to be the move for Bitcoin. Of course, if it comes back up here and let's say it closes above 27,347, then that would be a long, but I just don't really see it closing up above this level, like up above this level. If it closes up here, then that's great, because that means that it would have reclaimed this entire support. But yeah, I just don't see that happening. So I would probably want to get out at 26.8 and then try to get back in 25.2 was my area. So I'll say 25,340, which would give something like this. Honestly, yeah, that's still a decent. That's a good trade. Almost a 3R, almost 6%. Yeah, so this is what I would do. So now we could look at Ethereum, and if we look at Ethereum on the high time frame chart, what do we what do we see here? We see that we have this swing high to the swing low, and it tagged the 38.2 and then retraced to just about the lows again before turning around and coming back up and making a higher high. But this higher high was immediately rejected, and it fell immediately back down below this prior resistance high and these support levels, along with this 61.8 of this entire move up from the bottom down here up to the top. This is the 61.8 of that, and yeah, it was rejected from there, and then finally this looks like it was just some type of distraction play, and now Ethereum is not looking good either. I think that this type of candlestick is really, really bad, and if you look at the 2-week chart, you can see that this is that same graveyard doji or shooting star candlestick where it's just like the buyers were stepping up, but then all of a sudden the sellers just smacked them back down, not once but twice, or 4 weeks in a row, basically, because this is 2 weeks increments, 2-week candles. So yeah, to me that doesn't look good at all. Yeah, and this is the 38.2. So it did hit, at least Ethereum hit the 38.2 from this move from the swing high to swing low, on the most recent swing. On the entirety of the move from the very top to the very bottom, that is right here. So this was the 23.6 and the 38.2 is right there. So this was the 23.6 of the entire move, plus the 38.2 of this swing high, swing low, plus the 61.8 of the entire move up. So it had a lot of precedence, and now that we're back underneath of it, I don't like that. I want to see us close above here. If we could close above here, that would be really, really good. And then I would target pretty much 2,500, because this level is super, super, super important. Obviously, lots of support back here. Plus, it's the 61.8 of this move down. Plus, it's the 38.2 of the entire move. So, yeah, between 2,500 and 2,600, this is absolutely a take profit zone, 100%. Now, let's go into the smaller time frames. And actually, let me see if I have it on here. So get rid of this, and let's just do a little bit of hindsight analysis right now. What did we see? We saw that we had literally the same thing with Ethereum that we had on Bitcoin. Massive move up, major, super, super, super bullish. So buy, and then fall back down here, super bearish, with but followed up with a quick reclaim. So right here, so this is extremely bullish again. So buy, and then all the way up, very bullish, very bullish, very bullish. And then of course we had the swing high back here, which was that
area that we just talked about, which I actually like this chart better. So we had this area back here. This looks like some type of manipulation, and then it dumped, and that was obviously super bearish as soon as it fell back below 1970. So let me go back to ETH right here. There you go. So as soon as we fell back below here again, pretty much 2000 to be honest, then that was super bearish. We need to look for an area to short. This was the fair value gap right here. And so you could have, put in your orders to short and got filled right there. Or if you were looking to do the, the bearish order block, you would not have gotten filled. Actually, this is not the bearish order block. This would be the bearish order block. Yeah, this right here would have been the bearish order block, but then you would have gotten stopped out right here if you would have done that. So in this case, the fair value gap is what was used as the determining factor of where to short. Not only that, but like 2000, was previous resistance back here, previous resistance right here, big psychological number. So this was the area to short for sure. And then, target these lows. So probably take profit right here. And then this happened. These 1, 2, 3 candles broke the market structure of these lows, all of these lows. So that's super bearish. So what do? You look for a area to get short in. So you could take the fib from the top to bottom. This is the 38.2. This is the 50. This is the 12-hour bearish order block. Let me get rid of this. And so could have done it here. Probably up here would have been better. This one a little iffy, because especially when this happened, because yeah, you would maybe take your short right here and then target down here. But then when this happened, it would be so hard to keep this short open. But if you waited to do this one instead, the 61.8 plus the bearish order block right here, it would never have gotten filled. So this is an extremely difficult type of maneuver to play. Not only that, but the RSI is like slowly moving up, which is like super bullish, but then all of a sudden it crashes. So that wasn't good. And then the MACD actually was also moving up. So this move up right here had a lot of weight behind it. So Ethereum not looking as bad as Bitcoin right now. Not looking as bad as Bitcoin, but obviously you never know. And so let me think about what I would do for Ethereum. I would actually much rather have had the 50% like up here, like been swept, and that would have been a good short. So I didn't actually see a short. Yeah, I didn't see a short for Ethereum. And we have not yet closed underneath this area, which is like close under here, and I would want to get out. We have only closed on it. So yeah, there's no, maybe on a lower time frame. Yeah, I don't know, maybe on a lower time frame, maybe if it comes back up here, then this could be a shorting opportunity. So let me get rid of this. Do something like this. And that might be what I would want to do. So that would be a all right, 2.7. Yeah, 2.7 R. Pretty solid. So yeah, this would be the the play for Ethereum. Yeah, it would be this. Okay, so now let's take a look at Ethereum against Bitcoin on the higher time frame, long-term chart we got going on over here. And what I pointed out was a couple things. First thing is this big diagonal support line. So we got 1, 2, 3, 4, 5, 6, 7. Got a bunch of touches right here. Then the other thing that I pointed out, which I think is really important, is this horizontal support line right here. Obviously, this was the deviation below the support. This was the previous support right here. This was the support right there. This was the support right there. Some resistance, right? So obviously 0.05541 is, and this up to 0.05, let's say 7, is very, very important and extremely important. Huge support. And this is basically this is literally what we've been ranging in for on Ethereum against Bitcoin for years now. And we came up, then we came down, and we made the top and we made the bottom. Then we shot back up. We did not get to the wick, but we did get to the weekly close before coming all the way back down, and we got to the wick on the way down. Finally, we made it back up to the close again before coming not all the way back down, but pretty far down. And then finally we shot all the way up and had a deviation above this previous high. But when this candle closed right there, and then that was basically a swing failure pattern above this previous high, and that was extremely bearish on the Ethereum against Bitcoin chart. And because this is on the weekly time frame, and of course over the next about 8 months, Ethereum was just getting decimated, just completely drowning against Bitcoin. Finally, we had a deviation below the lows, and this was probably very scary for a lot of people, but it tapped the 200 weekly exponential moving average before jumping all the way back up and getting the slight deviation back above. And this, of course, right here was actually very, very bearish for Ethereum as well, because you could see that it went above the previous highs closed, but then fell back down and closed below it. So that was another swing failure pattern / deviation above. And then the next week it just plummeted, right? So the next target, we had the deviation below, then we had the deviation above, or swing failure pattern above. And so the next target would logically be right here, would logically be the low again, just like how we had the high and then we had the low. The logical target would be somewhere between the close and the high, and that was hit. And then the target after that would be somewhere between the close and the low. That was hit. Then the next target after that would be somewhere between the close and the high. That was hit. Then the next target would be somewhere between the close and the low. And that, I don't think that was hit, but yeah, I guess we'll say that was hit. So then the next target would be somewhere between the close and the high. And that was hit. And then it actually overextended and it went higher. Next target. And then once it fell back down, the next target would be the lows again. So that would be these lows. I would think that would be these lows, to be honest. And eventually they were hit, overextended. Okay. Then once we reclaimed, next target would be the highs, which would be right over here. Okay. So you catch this big meat of the move, and now we're back in, So we overextended. Okay. Fell back down. So now what do you think the next logical place would be the lows, somewhere right around here. So that's what I'm targeting. Maybe it does something like how this just swung down and then popped up without coming all the way back down here. Or this one, but this one didn't actually end up coming all the way back up. This just, stalled out for a little bit, tricked a bunch of people, and fell back down to where it was supposed to go to. So the fact that it was down here and now it's up here makes me think it's going to come back down here. And not only that, but, actually, never mind. I was going to say we had this move right here broke the market structure of these lows. And so that's very bearish. But we reclaimed it, and then we reclaimed it again. So now I'm sort of bullish to, at least 6999, if not 75, 78. This is difficult, because if this did not happen, then it would. Well, actually, no, it's not. It's not difficult, because the same exact thing happened here. All of this is noise. That's literally what I have to think in my mind. This is all noise, okay, for the big picture. The big picture is down here. This is the big picture. I'm waiting for it to come down here and tag this. This is the big picture. Anything that happens in between here and here is noise to me. If it comes down here, I'll trade my Bitcoin in for Ethereum. If it comes up here, I'll trade my Ethereum or in for Bitcoin, or I'll sell my Bitcoin because the market's probably going to go down. One of the two is going to happen. And so, yeah, this is all noise, everything that happens in here. And if we go down to the 12 hour, you can try to do some type of analysis. Let me click on this chart. We had the ascending triangle. You could see this is a clear ascending triangle. It broke out, it retested it, and it's sustaining above it. And just in case you're not, you want a little bit more clarity in the ascending triangle, I'm just going to use this. It goes like this, up, boom, boom. There you go. Broke out above it, and it's holding, which is really nice for Ethereum against Bitcoin. So if I'm going to short something, I'd probably short Bitcoin if I think both of them are going to go down. I'm actually worried about this right here, because that's concerning. But maybe it will stay like this while this basically gets its energy back. I don't know how better to put it, and then goes back up as this continues to move up. The MACD, we have this down right here, and we have this up right here. So that's not good either. So this is like the indicators are not looking good for Ethereum against Bitcoin, but the chart, the candles themselves are looking good. So it's depending on whether you would rather use the charts or the indicators. And I always use the charts first. I like how this area was reclaimed. So this whole area from this right here to up here, now that it's above here, like I like it. Like that's very strong to me, because this is now, in my opinion, support. And also it broke out of the ascending triangle, so that's a good support. So I would think that we're going to hit at least 0.07 and possibly higher. We'll see. I said 0.08, which is all the way up here. So this is possible to target up here, but I'm not going to target this yet, even though I wrote this. I think that's a little much. It's a little much. Let me get rid of this. That's too high. That's just way too high. So because it could come up to the major monthly SR level and then fall down and reach the zone that I think that it's going to get to, which was somewhere down around here. So I'm trying to think of an actual trade. I mean, I wouldn't put this on, but this is pretty much what it's looking like is going to happen. This is what it's looking like is going to happen. I wouldn't put this trade on, but yeah, I think that Ethereum is going to outperform Bitcoin for the time being. You never know because of these things are very concerning, but just from a charting perspective of candlesticks, that's what it looks like, unless it falls back below here. So let me write this. Falls back under here. Target lows. Yeah, and that's probably what I would do. So yeah, all right. So let me put this in the Discord. Okay, and so somebody Nicholas just asked me what I think of Quant because it just touched 95. So I responded that, in my opinion, Quant looks terrible and it really needs to reclaim this level and close above it. So it needs to reclaim 100. It needs to reclaim 100 and close above it. Otherwise, it's really not good because if you look at the chart on Binance, that was where it started out, was $100. It was major, obviously it was the floor, and then it was major support, some deviations to trick everyone, and then another wick underneath of it to trick everyone. And then finally it did break down. And when it did break down under 100, boom, it fell all the way to 41. Absolutely terrible, before coming all the way back up, having some trickery over here by it, and finally making its way up back up to $230. And then of course this was major support right here, major support. Don't need to keep on telling you that. And then now we're hitting again. We're hitting it again. So we slammed down into it, and then we slammed into it again, and then we slammed into it again, and then we slammed into it again. And then the buyers said, you know what? I'm not gonna take all this. I'm gonna shoot this up. So they shot it up, but now it's slammed into it again. Dribble, and you look at this: one candle down, one candle up, one candle down, one candle up. It didn't even touch it. It didn't even touch it these times, but it came close with some wicks, and now it hit it, and it's like so lackluster. It's so bad. It's just like, I give up. There's no buyers. There's no buyers here. No one wants to buy here. That's the problem. No one wants to buy here. So now you have this. We've fallen underneath $100, which really sucks. And we have this diagonal resistance line. Obviously, this was top. Wicked up here. Again. It keeps on wicking into this major resistance. So now we have the horizontal and the diagonal. So it really needs to come back up above here to, at least 103 in order for me to get back in. So I'm going to sell all my quant right here in my trading account. And if it comes back up, then yeah, I'll buy back in, but not going to right now. And I forgot to mention that I will look to buy it down here at $63. So that's where I'll look to reaccumulate the quant that I'm selling right now. So that's about a 36% gain in the amount of quant that I'll own if I get it at $63 instead of from selling it at 96. But if it comes back up here, then I'll lose 6%. Pretty much, I'm risking 6% to gain 30%, and that's my that's quant. Okay, and I think that's gonna do it for me. This has been a long video, and we have went over so much. Next video will be a lot shorter, and I'll start going over more short-term trades, including Bitcoin, Ethereum, and alts, along with some stocks as well. I'm still working on my 2.0 course, so that'll come out sometime this year, and I'm also working on some other big projects that I'm pretty excited about. So with that, I think I'm going to log off, and I'm going to say goodnight. Thank you again. Thank you so much for watching. If you watch this, give this video a thumbs up, please. This was a super long video. It took me a lot of effort. So give this video a thumbs up, and just, write in the comments like, hey, good video, or like, appreciate this if you actually watch this entire video. I do appreciate you if you do that, and I will keep on going and really dedicate the next few months to this, because I really need to. I really want to, like, oh my God, I've been saying it for such a long time. But I hired an accountability coach, so I have someone really like on my ass telling me, hey, Lewis, you have to do this, you have to do this, you have to do this. So hopefully that works. I mean, I did get this video done tonight, which was a hassle, but I got it done. So thanks again for watching. I'm going to talk to y'all later. Peace out. Stay in the green. Keep having those healthy profits, and talk to y'all later. Peace. Bye.